Thank you everyone for being here and again for bearing with some of our Zoom challenges with Eventbrite. We're going to go ahead and do some troubleshooting to make sure that does not happen again. Feel free to keep introducing yourself in the chat. We'd love to hear who is here. Couple housekeeping things. We do have ASL interpretation today, and that should be spotlit to your screen. But if you have any trouble for any reason seeing our wonderful interpreters today, go ahead and use the three dots on the side of their Zoom video window to pin them to your screen to make sure that you see them. We have an amazing program here today. Jean Lee from BDO is going to go over some very important questions and tips about what happens after you get government funding. Just a reminder, this government funding 201 training is part 2, as it sounds. We had our 101 training last week, and a recording of that is available on the Arts Alliance YouTube page. We can go ahead and share a link to that recording in the chat in just a couple minutes. We're really excited to be presenting as a part of the Arts Alliance Help Desk a whole suite of programs to help support creative businesses and nonprofits. And I can share some more information about upcoming programs shortly, but want to plug that there is some other exciting programs coming up next week and throughout the month of June. Our work at the Arts Alliance Help Desk and this program has been made possible by the Illinois Department of Commerce and Economic Opportunity to help support the creative sector in Illinois. And I want to just tell you a little bit about Arts Alliance. For some of you, this may be your first program with us before we hand it over to Jean. So Arts Alliance, this is our plan for today. I'll give you a quick overview, pass it to Jean, and we will have some time at the end for Q&A as well as time for questions throughout. Feel free to use that chat and Q&A buttons throughout, though, to give your reactions, share your own experiences, ask questions. We really want this to be as interactive as possible. Arts Alliance Illinois is a statewide arts advocacy organization that works to build the creative sector's power through advocacy, policy change, and connection to much needed resources to improve quality of life in communities across Illinois. We have members across the state and across all art disciplines. And Arts Alliance does a couple of different things, has its hands in many buckets. We do direct advocacy work and policy work. We do a lot of research on the creative sector. And we also do technical assistance work. That's us at the help desk to provide support navigating public funding opportunities for the creative sector. From fighting for and winning COVID relief funds for the arts and culture sector to helping creatives navigate applying for, figuring out what kinds of grants to apply for. We're really here to ensure that institutions and individuals in the arts and culture world can get what they need. And our help desk is here to support you, to connect you with resources. And we have a lot of different things available for you on that help desk page, one-on-one support, as well as a list of public funding opportunities. We know that creatives in downstate Illinois, on the south and west sides of Chicago, often face disproportionate barriers to accessing resources they need. So we're really here to be that connector to make sure that everyone in the creative community has access to the resources that all of us deserve. And our program today is part of a series, as I mentioned, that we're holding throughout the summer to really give creative businesses and nonprofits the resources they need. We had a series throughout May all about getting started, starting a creative business, starting a creative nonprofit, and recordings for that are all available on our YouTube. Coming up in just 2 weeks, we'll have a series on expanding a creative business, and then at the end of July on expanding a creative nonprofit, as well as some other really exciting programs, standalone workshops. I do want to plug a week from yesterday, we'll be having a really interesting workshop on microlending for creatives. So all of our programming we announce on our social media and on our newsletter. So definitely sign up for that if you haven't already to make sure you're in the loop. And this training, like all of our others, will be recorded and available on our YouTube channel. So all of that intro being said, I'm really excited today to hand it over to Jean to introduce himself and take us through some important need to knows about government funding, this time the 201. So Jean, I'll pass it over to you.
Oops, great. Thank you, Jess. All right. So welcome, everyone. Thanks to Arts Alliance for hosting this workshop. We're talking about government funding for nonprofits 201. And I should clarify that this is really about federal funding for nonprofits. We'll get into a little bit of the flow down from federal to perhaps even state or county governments and how it may actually eventually get to you. But I do want to point out that this is really oriented towards federal money, not so much uh, state money from the state of Illinois. So, all right. So, welcome everyone. As Jess mentioned, I'm Gene Lee. I'm a senior manager at BDO. BDO is a professional services firm. We have offices all across the country. I am based in Boston, and I've been with BDO for about a year and a half now, a little bit over a year and a half. And before that, I spent my original career in education, working with a lot of middle school youth in youth development programs, educational nonprofits, and then transitioned to managing federal grants at the state level in state governments, and then also with a large nonprofit here based in Boston. So I have a lot of experience with a lot of restricted funding as well as federal funding. Um, so I'm really pleased to be able to bring you some of this information today and see how we can help you and your organization manage federal grants. So what we're going to talk about today are some cost principles, policies, procedures related to federal grants, a compliance environment, and activities that you'll need to set up to manage federal grants appropriately, and then also the single audit. And so I'll give you a little bit of information to start you off with figuring out how to really start to navigate the single audit. This is a 201 session. So as just mentioned last week, we did a 101 session, which is really sort of a basic overview of federal grants. This session is going to talk a little bit more in the technical aspects. It's not going to go too technical, but this is going to assume a little bit of knowledge on your part of federal grants. It's not going to go super deep, so you don't need to have sort of an advanced knowledge of it. But a little bit of familiarity probably will help. And so please, if I go over a concept or a term that is just simply too confusing to you, please mention that in the chat. We have parts where I'm going to stop for questions. So feel free absolutely to ask your question in the chat or use the Q&A function, or even at the end after you had a chance to contemplate what the question would be. This workshop is really meant for you. So we want to make sure that you have the information that you need in order to feel comfortable with federal grants. All right, so let's start off with getting a sort of sense of who's in the room. And let's see if I can launch a poll. Oops, actually, polls, here we go. All right, poll one. All right, let's launch this one. And let me know what your experience is with federal grants. If you or your organization never received one, you have some, you submit a proposal, still waiting, this is your first one, I'll give you a couple of seconds to sort of put in a quick response. Usually we get a very good mix of organizations. Okay, so it looks like responses have slowed down, so I'll stop the poll for now. Share the results. And so what we see, oh, pretty good number, 58% have received a grant in the past or are currently a recipient. And a quarter of the respondents here is that they never received a government grant. Okay, great. That's good. I do have a second poll. So let me see if I can launch that poll, which is the experience one. So let's do, oops, sorry. Okay, let's launch this one. This should be a little quicker. A little quicker to respond. Okay. Looks like things have stopped, so I'm just end the poll now just so we can get to the content. All right, so let's share that result. Okay, so, oh, wow, interesting. So 2/3 of you are have 0 to 3 years of experience managing federal grants, and the smattering for the other. Okay, so that's good. So it gives us the sense of who's in the room. So hopefully we can sort of collectively learn from each other. And again, your question, invariably, your question is going to be informational for someone else. So please don't be shy. Okay, so let's start off with If you're here for the 101 session, you may remember this particular slide. So this is the grant management lifecycle. And this is pretty common, not just for federal grants, but also for private foundation grants, corporate grants. It's really just identifying these three major phases that we call the grant management lifecycle. It identifies the pre-award phase, right, where you're planning, you're designing the program, you're planning budgets, you're really sort of prospecting for potential opportunities. You're spending the time developing your response to those RFPs or those proposal guidance. Let's say that you get an award and now you're in the award phase, right? So you get perhaps a contract award document. It describes the terms and conditions of the grants, when you have to spend the money, what you can spend the money on, the approved budget, your reporting requirements. This is really important, even though, it's a very small part of the life cycle, but it's really important because it really outlines all your requirements that you're supposed to do. And for federal grants in particular, this is really important in the sense that your compliance to these federal grants, these terms and conditions, is a part of your single audit if you're required to have them. But also for other monitoring activities that the funder may do, like a site visit or a desk review, they're going to be looking to make sure that you are following those rules and you're able to sort of manage these federal grants appropriately. And that's what this whole session is going to be about. Those blocks in the black are what we call the post-award. This is the most sort of lengthy time of the life cycle because you're starting up the project, you're getting your staffing set, you're starting your account set up in your ledger, you're figuring out who to purchase goods and supplies from, you're looking for partners, you're doing the work, and of course, all throughout the work, you're going to have to track and report on your performance as well as your financial. And hopefully at the end, you have a successful program and you're able to close it out, fully spent out the project with having met the goals intended, right? So grants management lifecycle. We're going to now, so one of the key things that we really need to understand, especially in the post-award phase, is the idea of cost principles. Okay, this is the whole idea of how you are going to spend and track and report on the money. The feds are really key on making sure that you have systems in place to prevent fraud, waste, and abuse, really. And so the uniform guidance, which is the set of rules that govern the management of federal grants, is the primary document that you're going to be using to understand how to do many of these policies, how to set up many of these policies and procedures. So what are the concepts you need to do to make sure that you're spending appropriately? Okay. So the first thing to really understand is the idea of cost principles. Now, the feds don't tell you use this particular general ledger system. They don't tell you how to set up the project. They're putting the responsibility onto you. And your obligation when you accept the money is that you are agreeing to an effective and efficient administration of the federal award, right? So that you are managing those monies and managing the progress in accordance to the terms and conditions of the award itself. Key to the costs and understanding what are allowable is the idea of costs being allowable, allocable, and reasonable. Okay, we're going to dive a little deeper into what those three terms really mean. The uniform guidance, which I mentioned before in the 101 session, but I'll mention it again here, is 2 CFR Part 200. CFR stands for Code of Federal Regulations. So these are inscribed in law and regulation. All these sort of rules, these policies and procedures that you need to have, what's allowable, what's not allowable from a cost perspective. It's a pretty lengthy document. And if you are starting out in managing federal grants, I really encourage you to find a copy of the uniform guidance, the 2 CFR Part 200, and spend a day, probably take you a day, honestly, to read through that document. You can Google it and it'll appear really easily. Okay, so let's dive a little deeper into what these allowable, allocable, reasonable costs really mean. So the federal government, through the uniform guidance, says that allowable costs, which are going to be costs that you incur to the project that are spent against the grant, need to be necessary and reasonable and allocable to the award. So let's break that down. It's necessary means that that whatever you buy in terms of goods or supplies or vendors or consultants that you may hire to help you with the project, that they all are necessary to advance the purpose of the project. So think about it. If you have a grant for a year and towards the last month you have maybe $1,000 left of unspent funds, these funds are typically use it or lose it, right? If you don't have eligible costs to incur against the grant, you're not going to get that $1,000 to cost reimbursable. So when it's necessary means that if you have $1,000 unspent money in the last month, you can't just go out and buy laptops and office supplies and other things to spend out that money, right? Because they're not necessary for the project. You can't just sort of say, hey, I'm going to do another travel. I'm going to have another trip to do X, Y, Z, unless that actually has been approved by your funder as a necessary element of the project, right? So that's what it means by necessary. That there is a purpose for the spending, that you're not just frivolously spending the money out to fully spend out the amount of money that you get. I'm not gonna go through all these squares. I'm gonna highlight a couple of them here. The one, let's see, pointer. I don't think I have a pointer. Okay. The box that says in accordance with generally accepted accounting principles means that your expenses and how you track the funds need to be appropriately recorded in your ledger, right? This is just normal accounting procedures. This is going to be important because, again, towards the end, when you track expenses and report on those expenses, the validity of your accounting is going to be tested through certain review mechanisms like a single audit or other kinds of site visits or desk reviews, basically monitoring activities of how you spent the grant. For all of you accounting folks or accounting-oriented folks, we know the importance of documentation and support for these transactions. But for those of you who are really starting out, really sort of may not have a strong financial background, the adequately documented aspect is really, really key. So these are going to be receipts, invoices. If you're a larger organization, maybe you have a purchase order system. Maybe you have acknowledgement that a staff person has received the goods that you bought, or feels like the services provided are adequately supported. So that documentation is going to be key to supporting and making sure that those costs that you incur are necessary and reasonable and allocable. Okay. So what does it mean by allocable? We said it a couple of times already. Allocable is really a way to proportion one expense against multiple codes, for example. So think of shared costs that go to multiple end results, right? The one that we think of the most, which is probably the most common way of approaching it, is your staff time or your own time. In an 8-hour day, maybe you spend, your time working on 3 different elements, 3 different projects, right? The allocability means that you are basically splitting that 8-hour day and identifying how did you spend that time, right? That's the allocation. You're proportionally distributing that particular cost based on the relative benefit received for the end purpose, right? So time is one allocable cost. There's other kinds of allocable costs. Maybe your rent, right? Maybe you can split the rent to project A, project B, and your general operations for your organization. Maybe you're asking for services from a translator, right? And that translator is going to be working on materials for project A or project B. They're going to send you one monthly bill, but ideally in that one monthly bill, they're going to say, hey, I spent, 2 hours translating pages for project A, and 3 hours translating pages for project B. So again, the idea is that you're allocating costs, right? You're splitting those costs proportionally based on the relative benefit received of the end goal. Okay, so we talked about allowability, we talked about allocability, and in some cases, not all costs need to be allocated. If in an 8-hour day, that's all you do is work on project A, then that's how you charge your time, right? If the cost that if the receipt that you get is for the interpreters full time on project A, and this person doesn't work on anything else, then that's how you charge the time, right? So not everything needs to be allocated, or you could say the other way that it's 100% allocated to this particular end result. Okay, so we talked about allowability, allocability. Now, what does it mean by being reasonable? Price reasonableness is the idea that you aren't overpaying for a particular cost. And subsequently, you aren't charging that overspend or that inflated rate back to the feds, right? So the idea behind this is that you need to identify and figure out what a prudent person would normally pay for this particular kind of expense. The feds will pay their fair share. They don't want to pay more than that, right? And this is just really being price conscious, right? It doesn't mean that you always have to pick the cheapest one, but you need to be able to sort of say, why you may have chosen a little bit more expensive item because the quality is better. It's going to last, maybe a couple of years longer than the real cheapest one, right? Sometimes you think about sort of like how you buy clothes, right? You can go to, say H&M versus going to Brooks Brothers, right? The assumption there is that Brooks Brothers would use better materials, the clothes will last a little longer, style will stay, classic over time, that sort of thing. It's a little pricier, but that's the reason why you pay for that particular thing. All right. Another thing to think about for cost is this is not a great segue, I'll admit, is the idea of indirect costs. So the difference between an indirect cost and a direct cost is the idea that an indirect cost is for a common or joint purpose that benefits more than one cost objective. The feds define cost objective as a program, a function, an activity, an organization, department, right? So think of functions like your finance group or HR if you're in a large organization, legal departments, your executive staff, right? They're supporting the entirety of the organization, right? They're not just focused on project A or project B. They support the entire organization. And in this way, those costs are considered indirect in the sense that you can't easily attribute their time and their expense to project A or project B, right? Your executive director is probably going to be working on multiple things throughout the day. And in some cases, their entire pay that they earn is going to be considered an indirect cost. They're not going to be saying, I'm going to charge my time in an 8-hour day to, 15 minutes to project A, 30 minutes talking to my board member, 45 minutes to project B, 60 minutes to a business development opportunity, right? It's going to be just too administrative burdens. So there are certain functions that you may have that are considered indirect costs. Now, the contrary to that is a direct cost, which is to say that your staff time, where you know that this person is working 4 hours on project A, or that this particular set of office supplies that you bought is intended for project A, or the expenses of renting a bus to take a group of kids to an after-school event is for project A. Those are all direct costs. You can identify that particular cost to that one purpose. Okay. So in some ways, when you start to build a budget, you may want to think through, how can I build in an indirect cost recovery to offset those costs of those shared expenses that cover the entirety of the organization, right? So again, think of like your finance costs, your IT costs, your legal expenses. If you have outsourced accounting, that could be considered an indirect cost. You pay one bill for that outsourced service, and that could be applied for the entire organization. You don't need to ask your outsourced accountant to say, of those hours that you're charging me, how did you spend your time on recording expenses for project A or project B? So the idea behind indirect costs is that the federal government will allow you to recover some of those operational indirect administrative expenses. It's done through a formula, and this is the formula here, which is to say that let's say in this example, you have $50,000 indirect expenses. You have $500,000 of direct program expenses. So again, specific staff committed to the project, supplies committed to the project, services, travel committed to the project. You do the math, which is a simple division problem, and you end up with a 10% indirect rate. This means that for every $10 of program expense, you can earn $1 in indirect recovery that can again help offset those shared administrative expenses. Okay, so this is something to think about because it is an allowable expense to add in indirect rate. The downside here is that the grant amount won't increase by your amount. So if you have a $100,000 grant and a 10% indirect rate recovery, you're not going to get $110,000. You still only get $100,000, of which 90,000 can go to program services, and that 10% will go to recover your indirect expenses. Okay. 10% is what we call a de minimis rate, which means that the federal government sets that rate if you want to seek that kind of recovery. In October 2024, that rate will increase to 15%. Okay. Again, there is that trade-off between, how much you can devote to program expenses versus indirect expenses. So that's something for everybody to think about. Okay. So here's where we can pause for question number 2. Let's give everybody a chance to type in something if they want. Someone does ask, will you get a copy of the slide deck? I believe so. Towards after the session, we get a copy of that. Okay. All right. Let's move on. Again, feel free to use the chat as we go through. All right. So let's talk about post-award compliance. So again, this is going to be after you receive the award. You're spending the money. You're operating your program. You're delivering your services. What do you need to think about? So we have a little question here, and in the chat, if you don't mind, sort of answering the question here, in your organization, who is responsible for complying to award contract terms and conditions? And if you don't have a federal grant right now, and you have, say, a private foundation grant, you can sort of answer in that vein, right? So if you have a private foundation grant, who's responsible for making sure that you are complying to the terms and conditions that the funder has set out? So just pause here to see if anybody is interested in answering the chat. Okay. All right, so we have someone saying treasurer. Someone saying I am for most grants, for capital grants, for building needs, is our planning fund. Okay, great. I am with board approval. I imagine that you are an executive in the team, executive director, board approval. Okay, great. So one of the first challenges is identifying, who is actually responsible, who's accountable for that particular compliance function. And it is very invariably going to be more than one person. And we'll get into some of that in this presentation here. So when we think about managing government grants, and again, federal grants in particular, these are some sort of tips and tricks and things to keep in mind as you start to develop your compliance, you're monitoring, you're sort of, making sure that you're crossing all the T's, dotting all the I's, to make sure that you're doing all the things you need to do, right? So first thing, read through the award documents very carefully, right? In many cases, these award documents are going to be very long, 30, 35 pages sometimes. It's going to have a lot of government speak in it. But it's really important that you read through it and understand what they're asking for, because that's basically how you can be evaluated outside of your program delivery. Those terms and conditions in that award document are going to be how you are evaluated to determine if you have met the full terms and conditions of managing these federal funds. Remember that these federal funds are taxpayer dollars, right? So these are things that you and I pay into as part of the public good. So the burden of making sure that you're stewarding federal money appropriately is on you. And again, it's tested through things like audits and desk reviews and site reviews. Okay. Other things you'll notice here, having procedures. We'll talk about some of the key procedures that you're going to need, but it's really going to be important to have key procedures for how you make those financial transactions, right? So this may just be a little beyond just federal grant. This may just apply to how your organization operates. So things like choosing your suppliers, how do you pay them? What's your purchasing policy like? How's your revenue recognition policy? Those sorts of things. Those are going to be sort of cutting across any organization from a financial management perspective, not just for federal grants, right? One thing, second bullet from the bottom on the right-hand side is routinely compare expenditures and budgeted amounts. This is something that we really advocate at BDO for every organization, is to do some regular and routine financial monitoring. This is typically done through budgets versus actuals, monthly, quarterly financial statements like P&L, profit and loss statements, or balance sheet, or things like that. The last bullet here, reporting requirements, also very key to keep in mind. When do you need to report on these things? It's very easy to forget about them, but it shouldn't be a tricky thing, because it usually is laid out very clearly in your Word document. There can be some challenges and penalties if you miss reporting, right? One of the heavy penalties could be that you may not be eligible to apply for new grants until you've actually fully complied with the reporting requirements of your existing grants, right? Or that you may not get paid until you fulfill the reporting. Okay, so they're not going to fine you necessarily, but they could have sort of downstream implications for future either payments or future grants, grant submissions, if you don't meet those reporting requirements. Okay, so these are some tips and tricks, general things around managing government grants. From a policy requirement standpoint, where we talked a little bit about that before, we're going to talk in more detail later on, but I'll gloss over this really quickly here. There are certain key things related to federal grants that you need to really pay attention to. And we'll go through some of these, starting with the financial management system, which is really your accounting system, your general ledger. The uniform guidance, which again is the rule book basically for how to manage federal grants. The uniform guidance says that your financial management system needs to do certain things, right? It needs to be able to identify all awards received and expended with the ALN, which stands for Assistance Listing Number, FAIN, I'll explain what these are, FAIN, which stands for the Federal Award Identification Number, agency or pass-through entity. So basically, they want to make sure that you can discreetly account for the money in and money out of this particular funding source. Okay. They are very concerned about commingling these funds with other funding sources in your accounting system. It does not mean that you need to create a separate bank account. It means that you need to be able to set up your accounting system in such a way as to be able to easily identify expenditures against this grant compared to other expenditures that you may have for other purposes, right? Or other funding sources. Okay. ALN, the assistance listing number, is basically a 5-digit code that identifies this particular funding program that gave you the money versus another funding program that gave you the money. There's something like 38 different federal agencies that give grants. There's hundreds of different grant programs. So ALN is just a code number, right? You'll be 2 digits, a period, and 3 digits. FAIN is the Federal Award Identification Number. It basically is an identifier number for the grant to distinguish you as a recipient, this grant versus another grant. It's like a unique number, right? So the idea, again, is that your accounting system is able to segregate or discretely account for these funds. Your accounting system generally should be able to also produce certain reports. So things like budgets versus actuals, or at least pull down your actuals so you can use, side Excel spreadsheets to be able to do that, to do budgets versus actual. You basically, approval steps, for example, in your accounting system is also another element. Report or track and report on the expenditures as needed. So your system needs to do a certain number of things, and most systems, I think all systems, generally speaking, now that are out there, should be able to do that. Okay. We talked about internal controls. So what are internal controls? Internal controls are basically the rules and procedures that provide assurance to external parties that you are, one, recording your expenses accurately, giving everybody the proper and valid financial look at your organization and also at the program. But it also ensures that you have a mechanism to detect and prevent fraud, right? We'll get into a little more specific about internal control, but this is something else that you'll need to have in your management of federal grants. So things like segregation of duties, certain policies and procedures, approval steps, identification of tasks, ownership of tasks, would be sort of examples of internal controls that would be good to have. Procurement is a big element for these federal grants. Procurement is basically, you buying goods or services in order to meet the needs of the grant. We'll talk a little more about that in a little bit. So this basically says that the Uniform Grants requires you to have written procedures. Okay, and there are other things that you need to do. One is to make sure that the people you're buying goods or services from are eligible to receive federal grants as a reimbursement or to do business with the government, right? So one of the things you'll need to do as part of your procurement procedure is to make sure that these vendors and suppliers have not been suspended or debarred from working with the government. Okay. You need to maintain records of the procurement. So basically, again, if you went out and sought 3 quotes for the price of this particular service that you want, you're retaining those records of that search, right? You retain the records of what you've done. Performance monitoring is also another key post-award function that you will need to do as part of your grants management. And we're talking about both programmatic as well as financial monitoring. And these bullets here are really an example of the different ways that you can sort of monitor performance, right? It could be that you yourself make a site visit to your locations to sort of see what activities your staff are doing with the participants. You're collecting data, for example. You're submitting back to the feds or to your funders annual reports, interim reports on the progress made programmatically. Financially, many cases you're going to have to be submitting financial reports on how you spent the money so far. So things like budgets versus actuals, as we talked about before, um, cash flow projections. So these are just ways that you can do internally as well as external monitoring for your stewardship of these federal grants. Okay. Now, for the few of you who make sub-awards or sub-grants to another entity, you will have another set of activities that you'll need to do as part of your post-award grants management process. I won't go over into this because in many cases this is going to be a small selection of you in the audience who are going to be making sub grants. But the idea is that uh, the the first organization that receives the award is considered the prime recipient. That prime recipient can either spend the money directly or they can sub-grant to other partners and other organizations that would do a portion of the project's purpose, right? So they can be considered a sub-recipient. That prime recipient, right, the organization that makes those sub-awards, have a certain number of things to do, which is listed down here. Again, this is going to be probably pretty uncommon for many of you, so I'm not going to spend too much time on this just because I know that there's a lot of other information I want to get through. So I know that there's a pause here for a question. I think there's one. I think there is a question in the chat. How do we determine if a vendor is eligible? Okay, that's a really good question. There is a website called sam.gov, sam.gov. SAM stands for System of Award Management. And it's basically a big database that you can key in the organization's name that you want to work with, maybe their address or their location, city, state, that sort of thing. And it will give you a report of whether or not they have been suspended or debarred, right? So it's kind of like a no-fly list for working with the government. In many cases, the people who appear as having had a suspension or debarment have been convicted of some kind of fraud, right? So Medicare, Medicaid fraud is pretty common. That's how a lot of folks may get on there. If you are associated with a terrorist organization, for example, that's how you may get on that list as well. In many cases, a lot of us won't appear on the list. You'll plug in the number or your information, and nothing will appear, and that basically means that you're fine to work with. Okay. Thanks for the question. All right. Let's really dive into policies and procedures here. And there is another poll question. Let's see if I can launch this too. Let's see. I think this one is number 3. So let's see if this works. Okay. All right. So does your organization have policies that cover financial operations such as accounts receivable, accounts payable, reporting time, expense reimbursements? Could be other ones, but let's see what everybody says. Okay. I'm just going to go ahead and stop the poll. Looks like responses are slow. Okay, so 58% says yes, you have policies and they are current. That's great. I'd like to hear that. 17% yes, you have them, but they need to be updated. That's fabulous, though. You have them, that's great. 17% says no, you don't have them. And 8% says you're not sure. Okay. So hopefully this will give you a little bit of direction. Next section will give you a little bit of direction on what to try to address with regard to policies and procedures. Okay, so this is again going to be really key for your post-award grants management function. So I talked earlier about internal controls. So just a reminder, internal controls are the rules and procedures implemented by the organization to ensure integrity and reliability of financial and accounting information, right? So things like your financial statements, financial reports. Internal controls also help with compliance with the law. It is a requirement in the with federal grants to have a set of internal controls. And they also help you operationally, your own organization, to detect and prevent fraud, right? So again, things like segregation of duties, approval workflows, limitations on spending by a certain individual, above which you need to have two people signing a check, for example, or approving a contract. The federal government says that you recommends a system, a structure really, called the COSO internal control structure. COSO stands for Committee of Sponsoring Organizations. These sponsoring organizations are organizations that make up like accounting, accountants, and internal control or internal accounting, fraud prevention kinds of things, forensic accountants, right? So they're just national accrediting organizations or licensing organizations that came together uh, in the 80s, I believe, they were asked to, by the SEC, the Securities Exchange Commission, to come up with a structure to help prevent fraud that the country was seeing in the 70s, significant financial fraud in the for-profit sector. The federal government liked it enough to be able to recommend that this structure should be applied to management federal grants. So they recommend this structure. It's not the only one you need to do, but it is the recommended one in the uniform guidance. So what are these COSO internal controls? It focuses really on 5 different areas here: control environment, information, control activities, monitoring activities, and risk assessment. And the idea here is that you are developing a comprehensive end-to-end process to identify and detect and then mitigate potential for fraud, uh, fraudulent activity, fraudulent financial activity, right? So you're setting up, approval layers, for example, in the control environment. Your board is aware of the need to review policies and procedures and approve them. Maybe you have a chief compliance officer or a committed function that deals with compliance, right? That would be the control environment of the organization, right? It's the set of procedures, structures that govern the overall operation of compliance throughout the organization. Things like control activities and monitoring activities are really going to be, how do you identify potential areas of fraud? How do you monitor them to make sure that nothing bad is going to happen? And how do you deal with it, right? So things like requiring receipts after you travel, requiring a second approver for that travel, budgeting those expenses and not spending it if it hasn't been budgeted. Approvals for your timesheets, right? That'll be control activities, right? Those approval steps. That's not the only way to do it, but that's one way to do it. And then someone else is reviewing what you've done. So reconciliation, big reconciliations of cash, month-end reporting of expenditures, cash flows, projected spending for the next period, that sort of stuff. Those are monitoring those spendings. You're looking for variances, significant variances, and you're trying to explain why did that particular budget line spike as opposed to being within a reasonable range of prior month spending, for example. Information and communication is really about how do you make sure that all these policies and procedures are shared across all staff who spend it, right? So a wiki page or a shared document. How do you communicate changes in policies? How do you communicate, these requirements of when to spend, how to track those expenditures, what kind of information does your accounting side need to have? in order to be able to record those transactions correctly, right? And obviously risk assessment, you're periodically sort of assessing, do these things work, right? This is very common when you have staff turnover. Say like you have a COO, Chief Operating Officer. They're the final approval for certain things. The COO leaves. Now you have a hole, right? So that's a risk that you're assessing. Who is now going to be leading or doing that approval step? What is the interim and what is the long-term solution for that particular thing, right? So this is a very simple sort of explanation of what you want to do in terms of setting up an internal control structure. There's more to it. This link down here, bottom, should take you to a page, website page on the COSO site that gives you more information, more detail about how you may be able to set up some of these kinds of system structures within your organization. From the uniform guidance, we know that there are certain key policy procedures, and some of these are listed down here. We're going to go over two of them in particular that seem to cause organizations a lot of challenges, right? These are going to be high-risk areas, but just from a listing standpoint, you want to make sure that you have general accounting policies and procedures. Ideally, you have time reporting in a payroll procedure, either inside the accounting policies and procedures or separate time reporting, time tracking kinds of things. Travel and expense could be a really heavy occurrence for your organization and your program. You want to make sure that staff who travel, come back, seek reimbursement, they understand what the rules are for booking those hotel rooms, those flights, how they seek reimbursement for meals, for example. Procurement is, again, buying those goods and services that you need. That's a really heavy one because that's going to be typically how that in time are going to be probably your biggest expense areas in your program. And there are a couple other ones that are probably pretty common in a lot of organizations, record retention policy, as well as the conflict of interest policy. So let's dive into two of those areas, the high risk. The first one being time reporting. So time reporting really means that you are reporting how your staff are spending their time to that particular grant, right? They're recording time in hours, and those hours then translate to dollars, right? This is an allocable cost, right? The government is going to pay you back, is going to pay back your payroll expenses, but they want to know that pay, those expenses, those payroll expenses are justified. And the way to justify that cost is through proper time reporting that your staff do. So what does that mean? It basically means that your compensation that you're providing to the staff is not increased by virtue of the fact that you're paying them through a federal grant, right? So they want to make sure that the compensation is reasonable, it's consistent. If you have hourly or salaried employees, that the payroll expenses you're charging back to the federal government is not any more. It's not a higher rate, for example, than what you would pay to another fund, right? The documentation of that is really going to be key. And for many of us, payroll is going to be our largest expense, right? So the documentation to support those expenses is very, very important to retain. It's going to need to be in an official system of record. It doesn't, and that translation between the hours that someone reports and the dollars that appear on your ledger, that link between the hours and dollars needs to be clearly, I don't know what the right word is, clearly definable, right? You need to be able to sort of work back and say, this $200 that we are paying equates to 1 hour of someone's time, for example, right? Okay, so you need to have, again, identified, documented policy, as well as time records for the staff charges. It doesn't need to be by hour, right? So the federal government doesn't say that you need to do it this way. You don't need to do it in this system. They just say that you need to be able to document how someone charges that time. There are a couple different ways of doing this. The the sort of gold standard way is to do what, say, lawyers do, or what we do at BDO, which is record all of our time that we spend in a day against key projects and activities that we do, right? So if I work on 3 clients during the day, I try to figure out I spent 2 hours working with client A, 2 hours with client B, I took a lunch break. In the remaining time, I spent with client C, right? So I'm allocating my time and I'm recording my time. And that record then translates to, those records in hours translates to a cost that is then shared with the client, right? It's a cost and expense of the client. That record of that payroll expense, working all the way backwards to how I recorded the time, that's what you're trying to keep. And it's in a system of record, right? Okay. So time reporting is going to be a key policy that you'll need to develop. Really understanding how you pay, how you make payroll expenses. Another key policy is going to be the procurement. Again, procurement is when you purchase goods or services for the purpose of the project. This is actually one of those areas where the uniform guidance really does tell you how to do certain things. This is one of the few areas that they do. The general idea is that the more you want to spend, the more you have to do. Okay. So reading this chart, you want to sort of read it left to right, starting with the first column of micro purchase. The idea behind a micro purchase is that these are going to be expenses or values of items that are less than $10,000. Okay. They're a micro purchase. It may not be an actual micro purchase to you, right? Micro purchase to me is sort of like $1, $10,000. But the idea is that to the federal government, anything below $10,000, you don't really need to do much competition. You can pick whoever you want to use, as long as that price that you pick is reasonable, based on your experience, your knowledge of the field. So going back to the earlier example of the translation, let's say that you want to, again, use a translator to translate this pamphlet from English to Spanish. You know that the going rate is X dollars per page, and you know that's a reasonable rate to pay, reasonable meaning that you have experience with this in the past. You can just choose vendor A instead. Just do it. From 10,000 to $250,000, you need to do the small purchase process, which is to say that you need to then find 3 quotes and pick between those quotes. It doesn't need to be 3. 3 is the for general standard, but so it could be 4, 3, 5, doesn't matter. You need to find more than one person to go to and then compare the prices, right? And again, you don't need to pick the cheapest one. You could pick a slightly more expensive one, because you know that they can do it faster for you, right? Or meet the deadline, or something like that. You just need to be able to justify why you chose that particular vendor or supplier when the cost is going to be more, between 10,000 and $1 to $250,000. In the middle here, gray, is the formal procurement method. This is going to apply when you have purchases that are valued at more than $250,000. So these are going to be very large things. For many of us, this is going to be a rare occurrence, right? But for large organizations like universities, hospitals, that $250,000 may mean, an X-ray machine that they need, or something like that. For many of us who do program service delivery, it's going to be a rare occurrence. But the idea behind the formal procurement process is that you are then developing a formal request for proposal or a bid document. You're going to issue that opportunity to potential vendors and suppliers. Those vendors and suppliers are going to respond back. You're going to create a selection selection process and a committee to determine who is the best vendor for you to go with, right? So if you think about, if you own a house or you have the opportunity to renovate a house or something like that, think of the process to sort of find 3 potential contractors, right? You want the kitchen renovated. You have plans for how to, rearrange the, oven, the stove, the sink. You're going to go out, find 3 contractors. You're going to say, I need it done by, by this month, I have this amount of money to pay someone. What can you do? They're going to respond back. You're going to make a choice. It's kind of like that idea, right? You're going to compete this particular opportunity for the work. Now, over at the very far left is what we call a non-competitive procurement. This is also commonly called a sole source procurement. The idea here is that there are certain circumstances where you don't have the time to go through a competitive process. So one of the grants that I managed when I worked at the state was a federal Homeland Security grant. These are going to be grants that are issued to first responders in times of disaster. When disaster strikes, you don't have time to go out and say, I need 3 quotes to figure out how much water I can buy. You need those pallets of water right now. So you're just going to go out and buy it because that's going to be an emergency situation where you don't have the time to compete the process, to compete the bid. So that's one example. Another example is when maybe you issued that a bid document, the RFP, and no one really comes back with a response. So you have inadequate number of responses. In those situations, you can make a choice by yourself, sole source procurement. Okay. The idea is that the sole source is a rare occurrence. It doesn't happen very often, but the federal government does give you an allowance for when you do need to make them. You need to justify why you didn't have a chance to compete that particular procurement. Needless to say, all of these methods really require you, again, to maintain that documentation. Invoices, receipts. If you do small purchases, you got to retain those other quotes that you rejected. If you do competitive bidding, you got to keep that documentation of the responses, your selection criteria. If you use a matrix to figure out why, and you rated responses based on certain key metrics, keep that documentation, right? So this is the requirement to demonstrate to the feds that you have made the reasonable choice, right? Remember from the very beginning, costs need to be reasonable. This is one way to meet that, in addition to making sure that you aren't selecting your brother-in-law to do the work. The other purpose of the procurement process is to make sure that the funding is available to as many parties as possible through a fair and transparent process, right? The idea of, again, I got a guy who knows a guy, and I'm going to give that guy that business. It's not going to work. The federal government requires you, in certain circumstances, to give the opportunity to as many potential organizations as possible to do the work. Another quick policy you may have is record retention. I'm not going to go over this so much, but the idea here is that you have a policy that sort of gives guidance to staff on how long to retain certain key documents within your organization. So things like your incorporation documents, your articles of incorporation, your board bylaws, board minutes, that would be set here. Bank transactions, payroll, cash reconciliation or bank reconciliation documents, those sorts of things. There is a requirement by the feds to retain documents related to the federal project for 3 years following the date of submission of the final expenditure report. Okay. There are other certain rules, but the idea here again is that you have a written record retention policy, and which includes a listing of the types of documents you need to retain and for how. So we talked about internal controls, we talked about certain policies. So here are some best practices for how do you develop these strong internal controls, right? So we talked about segregation of duties. That's a pretty common one, pretty sort of, in the first one that a lot of people really start to understand the idea of internal controls. Segregation of duties is basically, the idea that no one person is able to influence any financial transaction from end to end, right? So from the beginning to the end, it's split up where people do different parts of it. Someone makes the purchase, someone else records the purchase in your accounting system, maybe someone else pays the vendor, right? So you're separating out that entire financial transaction into multiple parts in multiple uh, uh, accountable parties doing that, right? Segregation. We talked about supporting documentation. Um, we talked about reviewing and testing those controls, right? Especially again when you have staff turnover, adjusting those things, adjusting those controls when necessary. Maybe you have a staff reorganization, right? Maybe you don't need to have two managers. You just need to have one manager. Well, how does that work then? Does that affect your typical controls? One thing that BDO recommends, it highly suggests in a lot of our client work, is automating as many of these processes as possible, right? So that you are moving away from paper or email transactions, email communication, and you're allowing the system to record how things are done and to create an audit trail within the system of these kinds of transactions and controls, right? So the idea is that you have your ledger and that you are integrating other subsystems with that ledger, that general ledger system that you have in order to create an end-to-end automated workflow, right? So say you have a time tracking uh, system that will translate and hopefully work with your payroll provider if you have an outside payroll provider. And that those payroll expenses would then be recorded through a payroll ledger, payroll journal entry into your accounting system, right? That can be done seamlessly. A lot of people use bill.com or Expensify as part of your expense management systems. Those are subsystems that may integrate with your ledger. It's a way to automate all these sorts of things so that you're not passing evidence of invoices or receipts or approvals through email or paper, right? One of the best practices for strong internal controls is again, train all your staff. Even the program side has responsibility for financial management. They spend the money. The financial system, the financial staff record those transactions. But the origination of that expense comes from the program side. They need to know these rules. They need to know what to do, how to code those expenses correctly, what kind of documentation is required to be able to justify the expense, those sorts of things. So when we say train all staff, it means all the staff. Okay. Some best practices here. Here's an opportunity for some questions. I think I see one in the chat. So let's see. Can I share the internal controls link in the chat? I will try to do that after I get through the presentation. But you can Google COSO, C-O-S-O, internal controls, and that will also appear as well. There are many sort of outside consulting groups like BDO, other accounting firms that do consulting around internal controls. So there's a lot of information out there, a lot of sort of blogs, nonprofit professionals who write about internal controls for small organizations. So there's a lot of information out there, maybe a little overwhelming, but they all will say very much the same kinds of ideas, setting up systems, approval workflows, segregation of duties, those sorts of things. Okay. So let me just pause here for a little bit more and see if there are any other questions anybody else has. No. Okay. All right. Let's go to the single audit. I think this one will be reasonably quick. So let me launch another poll here. Last poll of the day. What's your organization's experience with the single audit? All right. I think responses slowed down, so we end the poll. We'll share the results. Okay, so almost a third have never filed a single audit. We have one respondent who said they will be filing a single audit. And 62% said not sure. Okay, that's not uncommon. I've seen that before. So let's talk about what the single audit is. Why we want to. Oops, sorry. Sorry, I gotta stop sharing and close the poll out. Sorry about that. Okay. We want to talk about the single audit because that is one of the main ways the federal government uses to make sure that you are managing and stewarding these federal funds appropriately. But they are not, the single audit is not applicable to everybody. Okay. So let's go over what the responsibility is. The uniform guidance says that the auditee, which is you receiving the funds, you are responsible for procuring those audit services, right? The federal government is not going to say you need to do it. You need to determine if you meet the criteria that warrants a single audit. Okay, so the burden is on you. You need to prepare what's called a schedule of expenditures of federal awards. It's called a CFA. It's basically a list of your federal grants and how much you have spent against those grants in the fiscal year that you're reporting on. Okay. You also need to include audited financial statements. So in many cases, your auditor will conduct the single audit as part of your audit engagement when they do an annual year-end financial statement. You are required to, you as an organization are required to, if you have any findings, to follow up and take corrective actions on any audit findings that may be a result or may be revealed during the audit. And the uniform guidance says that you are required to provide the auditor with access, like to staff, your accounts, your books, your records, those sorts of things. Okay, so that's your responsibility. Again, no one's going to tell you that you need to do. You need to figure that out. So let's understand who is subject to a single audit. It's for the uniform guidance says that organizations that expend $750,000 or more of federal funds during a fiscal year are required to conduct a single audit. It's how much you spend, not how much you've been awarded. Okay, so $750,000 of spending of federal awards in one fiscal year, right? So you could have every year that you spend that over that threshold, you're going to have to do another audit. So it's not a one-time thing. In October 2024, that threshold, that 750, is going to go up to $1 million. So what it means is that if you only spend $20,000, or if you only spend, $700,000, you don't need to have an audit done, at least for the federal government. Okay. So it's one thing to keep in mind is how much you spend this fiscal year. Now, the single audit is one method, one means of sort of the federal government monitoring you. I should also point out that, again, site visits are a common thing as well, where the federal government may come out and want to visit. They may conduct other kind of program reviews. Now, these federal funds also include not just the money you may get directly from the feds, but also any pass-through funds from that you may receive as a subrecipient. So if you remember earlier, the first organization that gets the federal fund is called the prime recipient. If they then subgrant some of those federal funds to you, you are a subrecipient. That prime recipient is considered a pass-through entity. The funds that you receive as a subrecipient still retains the characteristics of the federal money. Okay, so that $750,000 threshold includes any money you may receive directly from the feds, as well as any federal money that you may receive as a subrecipient. Okay, so that's something to point out and make sure to clarify. Okay. The purpose of the single audit is two things really. It's to make sure that you have the adequate controls as required by the uniform guidance, and that you are compliant to not just not just to the uniform guidance, but also to all other program requirements in the award documents, right? So if the award document says something like, you need to acknowledge the federal agency whenever you publish materials with a statement that says, part of this work was funded by XYZ agency. That's a stipulation in your award document. During your single audit, they will look and make sure that you have actually done that, fulfilled that compliance requirement. Okay. All the documentation talked about earlier around, timesheets, around invoices and receipts for your purchases, all those sorts of things will be reviewed and checked. Not just are the debits or credits correct that run through your ledger. Okay, your single audit includes two things, right? It includes your financial statement, so your balance sheet, statement of activities, those sorts of things, and the compliance audit against the uniform guidance. So it's a two-part thing, and that's why you usually do this as part of, if you're required to do it, you do this as part of your year-end financial statement audit. Now, what's good about the federal government is that it basically tells you what they're going to do, right? It gives guidance to accountants and auditors how they should be testing for compliance to the single audit. So this is basically a list, and in the appendix in the deck that you'll see later on is more information around what do these compliance areas mean. But by knowing how they're going to test and what they're going to test, you can work backwards to make sure that you are creating structures, policies, and procedures that help ensure that you could say, hey, I've done this appropriately and correctly, right? Couple of common mistakes that a lot of organizations make sometimes when they do their first single audits. One is not understanding all the funding requirements. Again, as stressed before, read the entirety of the document, make sure you understand it. Not all auditors may be experienced in conducting a single audit. So if you now first cross the threshold, is your first time, and your past auditors have never done a single audit before, you may want to actually find or procure another auditing firm to do the single audit, or see if the auditing firm, the current auditing firm, can partner with another one that can do that single audit for you. Cost allocation issues, we talked about that earlier, about not properly documenting or allocating those costs. Again, the federal government is willing to pay their fair share, but they're not willing to pay more than that compared to other funding sources, right? So you want to make sure that you are allocating those shared costs and you're documenting how that allocation plan is carried out from the expense side. If you have subrecipients, like you make subawards, inadequate subrecipient monitoring, it will be a high-risk area for you. There's a lot of things to do. Again, it's not common for us to have subrecipients, but if you do have some, there are a lot of things that you'll need to do, a lot of documents you'll need to retain, a lot of steps. Again, I have that one slide that's basically listed out some of those things that you need to do. Just be mindful of all those monitoring activities. We also talked about lack of documentation. Auditors really only care about what they can see, right? So if you had a conversation that said, hey, someone approved it, no documentation, no written follow-up, no email trail, it doesn't matter. You can't prove it. So make sure the documentation is really key. Auditors, again, only care about what they really see. That's something care about, but that's in my experience. That's what they really care about. And we talked about insufficient internal controls and designs, right? So not having enough approvers, for example, not having true segregation of duties, not having a system to review and change controls when necessary, those sorts of things. When are you supposed to do it? For large organizations, they may actually have interim testing, where this is the situation where the auditor may come in 6 to 9 months before the end of your fiscal year to do an initial assessment of high-risk areas that they may want to test later on. Many of us aren't going to get to that point. We're going to be too small. So you're going to have a year-end testing, right? Which means that your year closes, and a few months after your year closes, your fiscal year closes, the auditors are going to come in to do the regular financial statement audit. Again, your single audit is going to be a component of that entire engagement at the end. Okay. So it's going to happen after your fiscal year. Now, your single audit report does need to be submitted back to the feds. There's another federal database that makes your audit results publicly available to everybody. You need to submit that report either 30 days after the receipt of your auditor's report or 9 months after the end of the audit period. Okay, so let's say your fiscal year ends December 31. 9 months from that means that you, within 9 months, you will have to submit your single audit report. That's the 9 months after the audit report. 30 calendar days after receipt means that, let's say your year ends December 31, your audit is completed, your single audit is completed in March. How many days in March? March 31. Then that means you have until the end of April to submit the report to the feds, right? That's earlier than 9 months. So again, it depends. This is going to depend on the circumstance of when your audit is going to be completed, your single audit. Okay. So what to expect when you do the audit? It's going to be an exchange, right? It's going to be back and forth. Your auditor is going to ask you a lot of questions. You have a chance to clarify what is it that your auditors are looking for. A lot of times they may be asking for documentation that doesn't really test what they really need to test, right? They have a protocol, but that protocol is going to be sort of generalized for a lot of organizations. It may not necessarily be applicable to you. So you have an opportunity to say and ask them, tell me exactly what it is that you need to test, because maybe what you really need is this set of documents, not what you're asking for. That will save everybody a lot of time, right? Whenever you give something to the auditors, make sure that you are reviewing that set of documents before you give it to the auditors. You catching a mistake is a lot less risky, a lot less of an issue than the auditors finding it, right? So you can have an opportunity to say, I need to make sure I understand the context for why this transaction looks the way it does before I give it to you. But here's the other set of documents that you've asked for. Okay. When I managed federal grants, I was on the receiving end of the single audit for 10 years. So I was the one providing those documents. And as much as we sort of set up our procedures really appropriately and strongly, we had strong controls, a strong accounting staff, they were invariably every year 2 or 3 transactions that just looked funny, right? They just did not look how those transactions should have looked. And we really had to sort of spend time unpacking and figuring out, why was this done the way it was? Were we missing those approvals? If we were missing those approvals, why did we miss that approval step? What can we show? What can we show as a different document to say that it still followed some kind of workflow for approvals, not just the standard one that we documented, right? So again, the audits, if you've gone through one or if you're going to go through one, there's a lot of sort of back and forth, a lot of exchanges. Building a rapport with the auditors is really helpful. In many cases, they don't want to find issues because it creates more work for them, right? So They aren't always an adversary. They aren't always trying to find problems with you. They sometimes really just want to sort of get in there, do the work, and then get out, right? But remember, your audit and your single audit in particular are there is to show two things. Is to show that your financial information that you present is independently verified, right? So your balance sheet, your statement activities, the rest of your financial transactions through your financial statements. That provides regulators, it provides bankers, bondholders, whoever else you want to interact with, some level of assurance that you are properly and financially managing your organization's health, financial. The second part of financial in a single audit is to ensure compliance to the uniform guidance and the program requirements of that. Okay. I do want to point out that Illinois has a little bit more restrictor audit requirements. Illinois itself does not have a single audit. That's a federal requirement, not a state requirement. But if you are a nonprofit operating within, licensed and operating within Illinois, Illinois state law has a lower threshold that requires an audit be done, right? So charitable organizations with annual contribution over $500,000 must file an audited financial statement. And the second criterion, charitable organizations with contributions less than $300,000, but more than $25,000 are required to file an audited financial statement. Hopefully these are current, because I know that Illinois changed them recently, but I believe that these are the current thresholds. Okay. All right, let's pause for some questions to see if anybody has anything that they want to ask. We are at the end of the presentation. I'll have some wrap up and resources that I can show you, but I just want to make sure that everybody has a chance for questions on the presentation first. And I know that we have an open QA session at the end. So maybe what I'll do is just go through the resources now. So the deck will have additional resources and additional things that I didn't get a chance to go through. One of the things that the BDO shares is this website, strongnonprofits.org. This is a website that was developed in conjunction between BDO FMA, which is a predecessor to the group that I work in within BDO, and the Wallace Foundation. The strongnonprofits.org gives you really valuable resources for nonprofits of any size, small, mid-sized, large, around financial management of your nonprofit organization. So things like it has a lot of tools, a lot of templates for budgeting, cash flow, audit readiness, selecting it. I think there's even one on selecting an accounting system, questions to ask your auditor if you're going to select an auditor, some board governance things. I myself use this site a lot to find those templates. It's a great website for you, especially if you are a small nonprofit that just needs an idea of how to do certain things. The deck also has some appendices, which are just some additional resources of things that I didn't get a chance to go over in detail, some common definitions of things, some more specifics around other parts of the uniform guidance. We focus again mostly on post-award things in this presentation. There are some things around pre-award. And there's some additional slides also around some of the more specific questions of the compliance areas that are tested during the single audit, right? So again, this is sort of like the knowing the test questions that you may get during a single audit. These are questions that the federal government gives auditing firms on the guidance for how to conduct a single audit. Okay. So I'm at the end. I know that there's a sort of open Q&A session, open Q&A time for the remainder of the thing. Jess, I don't know if you want to facilitate that or if I just leave it up for anybody that asks questions.
Yeah,
If
feel
you have,
free to put any additional questions in the chat, y'all. I know there were some questions throughout that were great. And as Jean mentioned, we will be sharing these slides as well. So, if something in this current moment isn't coming to you, you can always follow up with some more questions, and Jean's information will be on that as well. If there aren't any questions, I may move us to close just because I know we're a little bit over time. Jean, thank you so, so much for this. I do want to remind everyone that these webinars are recorded, so no worries if you were not taking immediate notes about every single thing that was said. We will have the recording on the Arts Alliance YouTube channel to share with you shortly. We really want your feedback on all of our workshops, so I'm going to drop a link in a chat to a short survey. We would really love any feedback you have, as well as suggestions about future programs. If there are pieces of this in particular you want us to dive more deeply into, that's really helpful for us to know. I did mention that there are a couple of other programs coming up. Um, as I mentioned, we have one next Tuesday at 10 a.m. that's all about lending and loans. So considerations to think about when thinking about other kinds of funding for your creative or arts nonprofit. Very different from a government grant, coming with its own challenges and unique requirements. But that will be a really interesting panel of some experts and hopefully some creatives as well, sharing their experiences of using microloans for their creative projects. I also wanted to plug in 2 weeks, we have the second part of our series on supporting creative businesses and nonprofits, which is 3 days of virtual webinars with a ton of amazing experts going over how to think about expansion and planning, other key considerations like thinking about taxes and insurance and contracts, some of the things that we really don't think of as much initially, but which are really key parts of making sure your organization can succeed and thrive. As we talked about today, some of that compliance stuff, well, it may not be as flashy, it is so, so important to making sure y'all's organizations can do and continue to do the important work that they do. So thank you all so much again. We really look forward to seeing you at a future program. Jean, thank you so much to you. Thank you to our interpreters, and I hope everyone has a wonderful rest of the day. Thank you.